Hello, welcome to my YouTube channel. This channel is all about the insurance. Today we will discuss about the credit scoring of the insurance. Let's continue without wasting your time. Credit scoring. The goal of every insurance company is to correlate rates for insurance policies as closely as possible with the actual cost of the claims. If the insurance is set rates too high, they will lose market share to competitors who have more accurately matched rates to expected costs. If they set rates too low, they will lose money. This continuous search for accuracy is good for consumers as well as insurance companies. The majority of the consumers benefit that they are not subsidizing who are worse insurance risk people who are more likely to file claims than they are. The majority of the consumers benefits because they are not subsidizing people. The computerization of the data has brought more accuracy, speed, and efficiency to business of all kinds. In the insurance area, credit information has been used for decades to help underwriters decide whether to accept or reject application for insurance. New advance in information technology has led to the development of the insurance score, which enables the insurers to better assess the risk of the future claims. An insurance score is a numerical ranking based on the person's credit history. Actuarial studies shows that how a person manages his or her financial affairs, which is what an insurance score indicates, is a good predictor of insurance claims. Insurance scores are used to help insurers differentiate between the lower and higher insurance risk and thus charge a premium equal to the risk that they are assuming. Statistically, people who have poor insurance score are more likely to file a claim. Insurance scores do not include data on race or income because insurers do not collect this information from applicants for insurance. The poor economy has not had a negative impact on credit scores. According to an April 2009 Property Casualty Insurers of the America (PCI) release, the recent economic downturn did not have the negative effect on credit scores that some people predicted. Major consumer credit reporting agencies such as Fair Isaac and TransUnion have reported that the average scores remain steady or have improved, possibly because the consumers are saving more and paying off debt despite the economy and credit crisis. No state has made regulatory changes to ensure use of insurance scores, PCI notes. Federal activities: the Federal Trade Commission has asked nine of the largest homeowners insurance companies to provide the information that it says will allow it to determine how consumer credit data are used by the companies in underwriting and rate setting. The Fair and Current Credit Transactions Act, passed in 2003, directed the FTC to consult with the Office of the Fair Housing and the Equal Opportunity on how the use of the credit information may affect the availability and affordability of property casualty insurance, whether the use of the certain factors by credit scoring systems could have a disparate impact on minorities, and if so, whether the computer models used could be modified to produce comparable results with the less negative impact. The study is expected to be finalized sometime 2010. In a similar study, the FTC found that auto insurers' use of the insurance credit scores leads to more accurate underwriting of auto insurance policies, in that there is a correlation between the insurance scores and the likelihood of filing an insurance claims. The FTC report credit-based insurance scores impact on consumers of the automobiles insurance released in July 2007 also states that the credit scores cannot easily be used as a proxy for race and ethnic regions. In other words, credit scoring predicted risk of for the members of the minority group in much the same way that it is predicted risk for the members of the non-minority groups. The Fair and Accurate Credit Transaction Act of 2003 directed the FTC to address the issues of whether the use of the credit had a disparate impact on the availability and affordability of insurance for the minorities. Based on a poll of consumers, the General Accountability Officer has recommended. Based on a poll of consumers, the General Accountability Officer has recommended that the Treasury and FTC take steps to improve consumers' understanding of credit scoring and how credit histories are used targeting in particular those with the less education. Thanks for visiting my YouTube channel. Subscribe, please subscribe our channel and support us for the further information.